Okay, welcome back to Gary's Economics. Today we are going to explain everything you need to know about bond markets. Okay, I know what you're all thinking. You're thinking, why is Gary wearing a vest? The reason is because it is incredibly hot in London. Now the elephant in the room has been handled. We can move on to the next thing that you're all thinking, which is, why is Gary not talking about Keir Starmer resigning and Andy Burnham becoming the next Prime Minister? And that is because we all knew that was going to happen like weeks and months ago. If you really want to know about that, you can watch my video from 3 weeks ago. Open that in a new tab and you can watch it afterwards. What we want to talk about today is, I want to give a really good explanation of something which is more important in a way, which is not the sort of the face who is in charge, but really the economic power that has been driving economics and politics in this country for at least about a year and a half, and which is going to drive economics and politics increasingly in basically every country in the world in the next sort of 5-10 years. And that is bond markets. Bond markets have been tremendously badly covered in the media, almost comically bad. My favorite moment of absurd media coverage of the bond markets is this from The Guardian last year. YouTube radicals such as Gary Stevenson act as if John Maynard Keynes had never been born. Without a wealth tax, the UK will soon go bankrupt, he warns. An unlikely thing to happen in one of the richest countries in the world with its own money printing press. Traders are about to bring down the government, he told Guardian readers in January. 10 months later, we await the excitement. That is Aditya Chakraborty hilariously failing to recognise that the bond markets have been basically in charge of his government for about a year and a half. We'll get back to that, but first we need to explain what is a bond. All right, so I want to really break this down like from absolute basics so you really understand the bond markets, government bond markets, and we have to start with what is a bond. The most important thing to understand, if you want to be clear about this, is very simple. A bond is a loan. I think that is the first thing. If you replace the word bond with a loan, it's going to make everything much easier to understand. The government borrows a lot of money and it borrows that money using bonds. A bond is a loan. The government borrows money from largely wealthy people, also things like pension funds, and it calls those loans bonds. The only difference between a bond and a loan is you can sell a bond. So for example, if I lent Jack £100, he gives me like a IOU, Jack owes me £100, and then I can sell that to Dave for £90, and then Jack owes Dave £100. So a bond is literally just a loan, but we can sell it, we can transfer it between each other. The reason these are important is because governments all across the world borrow really an enormous amount of money. Whenever the government wants to spend money on things like education or healthcare or pensions or things like investment, like building a new bridge or a new train line or a new road or a new hospital, it broadly has two ways to cover that spending. It covers most of its expenditure through taxation, but when it has big payments to make, like for example, especially when we have big crises like 2008 or like COVID, or perhaps when governments want to make big investments, they tend to borrow the money to do those things. Over the years, especially because of the many recent economic crises, governments have been borrowing more and more money. The total amount of UK government debt is roughly equivalent to about 100% of GDP. So equivalent to roughly everything the country produces in a year. That comes out at about £43,000 per person. So your share of the government debt is £43,000 per person. That's not per adult, that's per person. So if you've got like a newborn child, he owes £43,000, he or she, obviously. So it's a lot. UK government debt is a lot. But that 100%, I think the exact number is, just over 100%. It's pretty normal for advanced Western countries. US, France and Italy all owe slightly more as percentage of their economy, about 120, 130%. Germany and Australia owe slightly less, about 50 or 60%. And Japan famously owns much more, about 200%. But these are big numbers, £43,000 for every man, woman and child in the country. That is how much you owe to primarily richer people as your share of the government debt. Yeah, huge amount of money. And the way that this tends to work is the government will, when a government borrows money using a bond, using a loan, the average length of that loan, the time period of that loan in this country is something like 12 to 13 years. And because the government has been borrowing for, hundreds of years, they're constantly having to pay off the loans from 12, 13 years ago. So I looked up just this morning, like when are the government's loans due? And the government has like tons and tons of different loans. So the government has one big repayment of a loan due on the 22nd of July this year, one on the 22nd of October, one on the 29th of January next year, one on the 7th of March in 2027. So basically, sort of every 3 months or so, the government has to make a big repayment of one of its loans from 12 or 13 years ago or something like this. And the way that it always makes those repayments is it basically refinances the loan. So it's a bit like if you had a mortgage, which was a 10-year mortgage or say a 5-year mortgage, you've got a 5-year fixed rate on that. After 5 years, you have to go back to the bank and you have to say, okay, I want to extend this loan. What rate will you give me now? And when this happens, obviously you would go to your bank and ask to extend the mortgage. But what governments tend to do is they go to government bond traders. So the eventual lenders, the people at the end of the chain who lend the money to governments are usually wealthy individuals, things like pension funds, sometimes foreign governments. And you yourself could also buy government bonds. I am a holder of government bonds in my sort of investment account. But largely, the vast majority of government bond purchases, people who lend money to the government when a previous loan expires, are the bond traders. I was a short-term interest rates trader for a long time. It's very similar to a bond trader. But when the government has a loan maturing, it will basically go to financial market traders and it will say, we need to borrow, 50 billion pounds, 20 billion pounds. And they will do an auction, which essentially it's a kind of gamified negotiation between the government and the bond traders. What interest rate will you charge us if we want to borrow 20 billion pounds on 22nd of July? Now, this is why the interest rate matters, because every 3 months, the government has to refinance one of these loans. A lot of these loans are currently at very low interest rates because we had a period of time from 2008 until about 2022 when central bank base rates in the UK and across the world, Bank of England base rates, Fed, ECB base rates were zero. And this meant that wealthy people couldn't get much interest on their money, so they were very willing to lend money to the government for very low interest rates, as low as 1%, or even I think during COVID, it fell as low as almost 0%, almost interest free. But now many of these loans from the sort of 2010s period are coming due and the government is having to refinance these loans. And if it cannot convince the financial market traders to lend them the money at a good, cheap interest rate, then every few months, the interest rate which the government has to pay on its very, very large government debt, remember it's in this country, £43,000 per person. It's a bit more in a lot of other Western countries. If they cannot convince the traders to refinance those loans at a decent rate every 3 months, the rate of interest that the government is paying on this very, very big stockpile of debt is going to slowly creep up over time. Okay, why does that matter? We did cover this in a video last year, which I will put a link to here, but I'll cover it quickly again. The reason it matters is that if you are paying large amounts of interest on your debt, then your debt is going to grow over time. And the government has a bit of an advantage when it comes to managing large amounts of debt. Well, it has two advantages specifically, which is one, inflation, I, which I call there I, and economic growth, which I've written here as G. So when the government borrows money, just like if you borrow money on a mortgage, that is not adjusted for inflation. Technically, in the UK government's case, some of their loans are adjusted for inflation, but most are not. And in most countries of the world, the majority are not. So what that means is if we have large inflation, like we have had in the last few years, the value of the cost, the price of everything in the economy can go up 20, 30, 40%, but the debt stays the same, which means that if effectively the stock of debt, the amount of debt the UK government has, is being devalued by inflation every single year. This is similar to sort of if you buy a house for £500,000, you borrow £400,000, and then there's a load of inflation, the house price doubles to £1 million. Your debt relative to the value of your house has fallen. This is the same. If you have a lot of inflation, prices go up, the debt of the government falls relative to inflation. Growth is more of a real thing, which is, again, the amount that the government owes on its loans is not adjusted based on government growth, based on economic growth, sorry. So if the economy is growing, the size of the debt relative to the size of the economy is going to shrink every year. So these two factors together, inflation plus growth, work together to make the debt smaller relative to the size of the economy. And what this plays against is the interest rate, which I'm going to call here R. So basically you have a kind of contest between these two factors, inflation and growth versus the interest rate. So the reason that the UK is in a bit of a tricky spot now and has been for a couple of years is because over time, as interest rates have been trending up globally, the interest rate in the UK has been ticking up to close to 5%. So at the moment, looking today, the UK interest rate on 10-year loans, which is sort of average length of loan, is 4.77%. The reason this is a problem is that if we look at inflation and growth, economic growth in the UK and in most of Europe has been pretty low for a long time. It's been sort of long-term trending at something about 1% a year, not very high. And the inflation rate, which is targeted by the central bank in the UK, is 2% a year. They've generally been failing at that. It's been a bit higher. But if we assume that the Bank of England is good at its job, inflation should go back to about 2%, and economic growth, it's on a long-term trend of about 1%. So if we add these together, we get 3%, which is significantly less than 4.77%. This means that we are in a state where every year that debt stock is going to grow by its own accord, basically. This difference is only 1.77%. Inflation has been higher, which is going to help. But if inflation goes back down, and crucially, if this were to go up, that could start to become a big difference relatively quickly. And then traders are going to start worrying, okay, well, is that debt just going to grow and grow and grow in an exponential fashion? So the real risk of this risk of the interest rates slowly going up in a way that means that the debt starts to grow is basically something which I've mentioned a number of times on this channel before, which is compound interest, which is if you grow by 2% a year, 2% a year doesn't seem like much, but within 10, 20, 30 years, it grows in an exponential way. But it will be more than exponential, right? Because if the traders can see that your debt is growing, they're going to start worrying that in the long run, you might not be able to pay the debt back, or you might be tempted to do what The Guardian suggested, which is just print tons of money, which is not going to be great for people who are owed money because the money will be devalued, and they are going to start demanding higher interest rates. And then if the interest rate goes up, then you have to pay more interest, which makes your financial position even less sustainable, which means that it means you have to pay more interest every year, and it means the traders are going to ask for even higher interest rates, which in turn makes your financial position less sustainable, which leads to higher interest rates. So you have the potential for this negative feedback loop, which is high interest rates lead to negative perception of government finances, which leads to even higher interest rates, which leads to even worse perception of government finances. And this can get bigger and bigger and bigger, and this has the potential to lead to what is sometimes described in the press as a death loop or a doom loop. And this is essentially what happened last January. So the reason that The Guardian wrote this article last year. So I was interviewed my paperback of my book, The Trading Game. #1 on Spotify last year, fantastic, great book. I was interviewed for The Guardian last year, January, which is when the paperback came out. And this thing happened, which was the interest rate on the government bonds were getting higher and higher and higher and higher and higher. And it was really at risk of starting this kind of doom loop spiral. It was only sort of 6 months into the Starmer government. And really, like the UK government, the Labour leadership, Starmer and Reeves, they kind of had no choice but to like totally like shit themselves, like massively back down, massively retrench any spending plans. This is why they tried to do things like cut benefits, tried to think about how can we raise taxes, because we had this situation last year in January in this country where there was a very, very real possibility of the bond markets basically decapitating the UK government in a very similar way to what they did to Liz Truss in, when was Truss, 2020? When did the Queen die? God bless her soul. 2022, let's say, Liz Truss. Financial markets essentially deposed one British Prime Minister within something insane like 45 days or something, just a few years ago, very soon after coming into office. And they were really at threat of decapitating the Starmer government at the beginning of 2025 after just 6 months. They got very lucky, the UK government. They got a good inflation print, which meant that interest rates came down a bit. We'll get into that a little bit later. But the truth is, ever since that moment, January 2025, and when I talk to politicians, Labour politicians or people in government, you really, really get this sense. These guys are basically terrified that anything that they might do economically, anything that might want to do economically, will cause a repeat of what happened to Starmer and Reeves. Reeves is still our Chancellor, for those who are not in the UK, which is, the Finance Minister. Yet they are constantly terrified that what happened to Liz Truss in 2022 and what very, very nearly happened to Keir Starmer in 2025 will happen again. And this absolutely dominates their economic policy. And it has meant that really our government, and if you're not in the UK, I guarantee you this will happen to your government, it probably already is happening, has been ever since January 2025, like completely handcuffed by this terror, basically, that anything it might do which is not approved of by bond market financial traders will lead to a doom loop and will lead to like the forced deposition of the Prime Minister. And this is why I really enjoyed when The Guardian, because I don't think anything could be more Guardian than to have the financial markets like basically do like a hostile takeover of your government and enforce austerity on working people, and to have the Guardian 1 year later like laugh at it because they haven't realised that it's happened. Like, I think this is I think nothing could describe more the British upper middle class. Because of course, what has happened is, richer people, such as the people who write for The Guardian, and some of the people who read it, have been protected, whilst the poor have been decimated, largely because the bond markets have basically taken over the UK government. If it wasn't serious, it would be more funny, but it is still, it's just this article, how funny Gary said that bond markets would take over the country. It's incredibly let them eat cake, isn't it? Look that up if you don't know what it is. Another cultural reference from Gary's Economics. Okay, so next, what can we do? You probably don't want to be in this situation where your government's economic and financial policies are totally dominated by a bunch of financial market traders who are not democratically elected and are usually quite rich people and don't have any particular reason to care for the well-being of the people in your country. What can we do? Can we stop it? I think the best way to discuss how we should respond to this, how we can stop it, is to deal with, I think, the three main misconceptions and misrepresentations about the bond markets that have been very prevalent in the British press in the last sort of 6 months, 1 year. So I've got a list here of 3 nonsense stories about the bond markets. And the first one is that all of this bond market nonsense is entirely the fault of Andy Burnham. So for those who don't know, Andy Burnham was Mayor of Manchester. He is almost certainly going to become the British Prime Minister in the next couple of months, maybe even in the next few weeks. And the press here in the UK has been understandably in this kind of psychodrama of, will Andy Burnham become Prime Minister? When will Andy Burnham become Prime Minister? And there has been a continuing trend of basically largely coming from more right-wing newspapers, basically saying that the whole reason that UK borrowing costs are high, UK interest rates are high, is because of Andy Burnham. Financial markets hate Andy Burnham. Andy Burnham doesn't know anything about economics, this kind of stuff. And that analysis is basically completely nonsense, and I'll explain why. So in order to explain this, we need to discuss a little bit about what is it that the investors in government bonds, so the people who lend to big national governments like the British or American governments, what do they want? Okay, so you need to think about why would an investor, a very wealthy person, decide to lend money to governments, decide to buy government bonds when they could do other things like buy the stock market. Stock market has gone up enormously in the last few years, or buy gold. The gold price has gone up enormously in the last few years. Why would you choose to lend money to the government, buy government bonds? When you lend money to the government, you know exactly what you're going to get back. You're going to get what you lent in, and plus your 4.5%, 5% every year that it's in there. It's not like a particularly sexy return. You're not going to get what you make, buying some of these tech stocks, or what you're going to get if you bought Bitcoin, or even the gold price has gone crazy. So you're totally losing your ability to own assets which could double or treble in value, like we've seen from a lot of the stock markets in the world in the last few years, and like we've seen from the gold price. So why would you choose to buy? Why would you choose to make this like relatively unsexy investment choice, which doesn't have a lot of growth potential, which doesn't have a lot of upside? And the reason investors like to do it is basically two things, which is diversity and security. So the first thing to recognize is a lot of investors in government bonds don't just own government bonds, they also own stocks and gold. So, and property and land and I've spoken about this in my Iran war video, how, I own a lot of oil, and it's really what most rich people want to do is build like a very diversified portfolio of assets. If you're very rich, you don't need to put all your eggs in one basket. You can basically afford to buy a little bit of everything. So most wealthy people, especially very wealthy people, will own a lot of stocks and a decent amount of gold. They probably have a property portfolio, and they will also have a big chunk of government bonds, loans to government. And the reason they like the government bonds is because government bonds tend to do well at times of economic crisis. So you will probably be aware that when there's really bad economic news, like most recently, most obviously, things like the Iran war or the Trump tariff crisis from was that last year? From last year or a couple of years ago? I think it was last year, Trump tariff crisis. When those things happen, the stock markets tend to suddenly fall quite a lot, and stock markets can fall 20, 30%. If you look at the gold price, stock markets now, they've gone up so much, there's a very real chance of like a very aggressive fall down. Government bonds tend not to do that, and because we know exactly how much money we're going to get back, and we know we're going to get exactly our 4 or 5% interest every year, they are an incredibly steady but unsexy option. And they just give you like a regular, steady income every single year. And this is why they are seen as the secure option. And they're a very popular investment for like very low risk investors. So a lot of pension funds will own a lot of government bonds because pensioners like to have a steady, stable income. A lot of insurance companies will have government bonds. If you have a lot of money in a bank, in just a bank savings account, they will probably be using that money to buy government bonds to lend to the government, because they don't know when you're going to take their money out. So basically, any investor that either is so rich they want to have a very diversified portfolio, or for some reason is very risk averse and wants a very stable, secure investment, is going to buy government bonds. So what do government bond investors want, and what do government bond investors not want? So the number one thing which government bond investors want, people who lend to the government want, is low inflation. And the reason behind this is when we have inflation, like we've had a lot of in the last, 5-10 years, is the price of everything goes up. The price of everything goes up, and this generally includes stock prices, gold prices, house prices, land prices, but what it doesn't include is government bond prices, because if you lend money to the government, then you have a fixed return on that. You're going to get your £100 plus your 5% interest, and that is not going to go up. So if we suddenly have like a very inflationary situation, government bond investors really, really lose. So if you are thinking, and this is something which is relevant to you, right? Like it's the same if you put your money in a bank account. You know, if you just put money in a bank account and get 5%, suddenly there's an inflation crisis and the price of everything goes up by like double, you've effectively lost half of your money, right? So government bond investors hate high inflation. Second thing that government bond investors want is stable government finances. This was the big thing that really hit Liz Truss. Liz Truss came in, suddenly slashed tax on rich people. Government bond investors were looking at that and thinking, well, is she actually going to be able to pay us back? There's this saying in markets, you know, the return of your capital is more important than the return on your capital. You don't want to be lending money to somebody who seems just like they don't have any concern for their long-term capacity to pay your money back. And there's two risks on that. There's one risk is if their finances are very unstable, that they literally won't be able to pay you back. The other risk I think is sort of hinted at in that Guardian quote that I said at the beginning. So they said this interesting thing in the Guardian quote, which is it's unlikely the UK will go bankrupt when it has its own money printing press. And this is one thing which, in an age of like increasingly unstable government finances, one thing which government bond investors are always wary of is that maybe the government will be like, well, we can't afford to pay these guys back, so let's just print the money. And I think I've done videos on money printing in the past, which I'm find on, we'll link it up. But you know, if you look at the history of collapsing empires, collapsing societies, I think we're in collapsing empire and a collapsing empire and a collapsing society now, not just here in the UK, but across the Western world, in the US. There almost always comes a point where governments just think, you know what, let's just fucking print tons of money. And what that almost always does is causes an inflation crisis. I think we can make a good argument that this is part of what happened in COVID. Again, this is a risk of causing a massive inflation. And if there is a massive inflation, you don't want to be holding the bonds, you want to be holding the assets. So basically, stable government finances are good, unstable government finances are bad, because they might mean you don't get your money back, and they might mean that the government really basically deflates the money before you get it. And the third thing, which government bond investors want, is they want low central bank interest rates. So this is very slightly technical, but if you're in the UK, you'll be aware there is a government institution, sort of quasi-independent government institution called the Bank of England that sets the interest rate every month. There is a similar institution in the US called the Federal Reserve, in Europe, the ECB, in Australia, the RBA. Every country has one of these, and they try to set the interest rate on cash every single month, or maybe every month, every 6 weeks, to basically try to keep inflation like low and steady. And if they think inflation is going up, then they're going to raise the interest rate. And we've seen obviously a lot of that happening in the last 5 years since COVID. Inflation's been high, so interest rates have gone up. And if you are a government bond investor, you don't want this, because if you think interest rates are going to go up, and this is something I made a lot of my money on it when I was a trader. During COVID, interest rates were like zero, and the interest rate you could get on government bond was like less than 1%. Obviously, after COVID, the interest rate went up very quickly, and now, as you know, government bonds in the UK trade at about 5%, depending on the maturity, how long term they are. The reason that the government bond prices have gone up is largely because the central bank interest rate has gone up. When you have cash in a bank, the government pays your bank interest on that based on the central bank interest rate, which means if you shop around, you can normally get something similar to the central bank base rate on a savings account on your cash. If you're not getting that, shop around, try and get a better rate. But if you are seeing, say we know that, and I'm not saying this is going to happen, say we're in a situation now where we know there's going to be another inflation crisis and interest rates are going to go up to 10%. Well, I don't want to buy a government bond now that's paying me 5% when I know that if I hold on to the cash, I'll be able to get 10% on the cash. So these are the main three things which government bond investors want. They want low inflation, stable government finances, and they want low central bank interest rates. Low central bank interest rates and low inflation are quite connected, because if inflation is low, probably the interest rates will be low as well. But this is the thing you need to know in order to understand why the attacks on Andy Burnham in the last few months have been kind of nonsense, right? So You are probably aware there is still, I think at the moment of speaking, a war in Iran, although every single day there's rumours of a peace deal, but that's been happening for months. And that war in Iran has aggressively pushed up the price of oil and many other things all around the world, and it is causing increases in inflation all around the world. And one thing that is particular about this inflation crisis and this war in Iran is there's really a lot of uncertainty about, and there has been from the very beginning, about how long the war will last. And as a result, like how big of an impact it is going to have on global oil prices. Oil affects the price of global energy. Energy is used in the production of basically everything. So if the oil price goes up, the price of everything goes up, which means that in the last few months, there's been a huge amount of uncertainty in the world, amongst traders, amongst economists, about what inflation is going to be. The central bank sets its interest rate to respond to inflation. So if inflation is uncertain, then the interest rate is uncertain. And that means that traders all over the world, especially interest rate traders, are just constantly reading the news, watching their phones, talking to each other, basically to try to figure out when the Iran war is going to end. And that level of extreme uncertainty, because as you now know, government bond investors are very, very concerned in inflation, central bank interest rates, and government financial sustainability. And all of these three things are really heavily affected by the question of how long will the Iran war last. What that means is the huge amount of uncertainty about all of those three factors has meant that government bonds have become incredibly volatile in financial markets. And what that means is, you will get in a given day where the interest rate will move, the kind of size which previously you might have seen that move might take a month, that move will be happening in a day or 2 days. And that has been happening quite consistently in the last few months, ever since the Iran war started. Government bond prices and government bond interest rates have been incredibly volatile because of all of this uncertainty about inflation and uncertainty about interest rates. And that has obviously coincided in this country in the last few months with a period of intense speculation about whether and when Keir Starmer will resign. He has resigned. Congratulations, Keir Starmer. And whether and when Andy Burnham will become Prime Minister. So you've had these two things happening at the same time, which is we don't know when the Iran war will end, we don't know what inflation will be, and we don't know if Andy Burnham will be Prime Minister. And that has meant that we have had, on a few occasions, we'd have a day where something happens about Andy Burnham and it looks like he's going to be Prime Minister. And on the same day, something happens on the Iran war and it looks like the Iran war is going to be longer than we thought. And what you will get is a collapse in demand for government bonds because of the Iran war. And some of the press has frequently, I think even institutions that should be respected, such as the Financial Times, will say, government bond investors are panicking because of Andy Burnham. And, as soon as I hear that, I would just very quickly I'll look at Bloomberg, and you can see what is happening to all of the government bond markets around the world. And you will see that obviously because the whole world is affected by the Iran war, all of the bonds around the world will move. So the interest rates for basically every country in the world on a big day might go up by 0.15%, 0.2%. It's very easy, I can pull up, I'm looking at it right here. You can see what's happened to Germany, UK, France, Italy, Spain, USA, Japan, Australia. And you'll be very able to see that what is happening is international. And if something happens in Iran and something happens to Andy Burnham and government bond prices move in every country in the Western world, that's probably not caused by Andy Burnham, right? That's going to be caused by the Iran war. And these stories keep happening again and again and again over the last 3 months. And they are, and I don't know Andy Burnham, I've never met Andy Burnham, but these stories, if I'm totally honest, are and have been repeatedly completely idiotic, to the point that they're basically verging on propaganda. So the first misconception is that the global bond market crisis is caused specifically by Andy Burnham, which is a nonsense. But we must also talk now about the second misconception about bond markets. And the second one, which is where we have to be a little bit more critical of Andy Burnham, is a idea that often gets repeated on the left, by different sections on the left, which is basically that like bond markets are like dickheads. They shouldn't be in charge of the country. F them. Get rid of them. And, you know, this is a sentiment which I totally understand. Anybody who knows about my history and has read my book will know that I'm not the biggest cheerleader for financial traders. And, you know, of course, your government and your economic decisions should not be being dominated by a bunch of traders in the city. But the problem with that is quite simply this graph, which you've used a number of times. We'll flash it up maybe here. And this graph, which I've used a number of times on the channel, is a graph of UK and various other countries' government wealth over time. So a big thing which we are like really keen to educate on this channel is that wealth exists. It is important. It's important who owns it. It is real. It's not just money in the bank. It's about who owns real resources. And back in the 50s, 60s, 70s, up until the early 80s, Western governments were big owners of wealth. Governments owned huge amounts of wealth. And since the 80s, since sort of changes in the way we think about economics, largely pushed by Ronald Reagan in the States, Margaret Thatcher here, there has been a change in the way we treat government wealth, the way we think about government wealth. And that has led to a decision over the long term to significantly decrease the share of the real wealth in the economy owned by governments. And in the UK, since the 80s, the share of the UK economy, UK wealth owned by government has gone from plus 100% of GDP, so the UK government owning lots of stuff, not being massively in debt, to negative 100% of GDP, which is the UK government not really owning anything and being massively in debt. And alongside that, we can show you this graph now, which is UK government debt as a percentage of GDP. And you will see that that has been like statistically, structurally growing over a long period of time. This is the reason why when people on the left, well, not just on the left, but this sentiment does tend to come from the left, say like the bond markets, like we don't need to worry about them, we can do whatever we want. That is quite naive, because when you look at the long-term trajectory of not just UK government wealth, but basically every Western government wealth, and also not just UK government debt, but long-term UK government debt, there has clearly been a long-term strategy of Western governments, both on the centre-left and the centre-right, to basically dissave assets and become long-term dependent on increases of borrowing. So what this means is, whereas governments used to own assets, which meant they could provide you with public services using those assets, they have chosen to get rid of those assets, transfer those assets to the wealthy, and replace the way that they fund your government services. Rather than providing you government services using assets that they, the government, own, they now provide you government services by borrowing money from the rich. And they borrow more and more money from the rich every year. And especially whenever there is any sort of long-term major crisis, 2008, COVID, even now the Iran war, the energy price crisis that just came out of COVID. Every single time that happens, the structural response of the UK government, of the US government, of Western governments, Biden did this enormously, Joe Biden in the US. The structural response of governments, well, because it's not even a left-right issue, because Donald Trump has also, again, significantly increased borrowing. Whenever anything happens in politics or in economics, political parties of the centre-left and the centre-right respond by trying to borrow money from rich people. Now, if your whole economic plan for 40 years has been, we're going to give all of our assets to rich people and just borrow money from rich people, you can't really turn around and say, well, f*** them. Because this is the reason why I campaign for and have campaigned for such a long time on the necessity of taxing rich people. Because once you move into this situation where the assets are increasingly owned by rich people, assuming the thing which is obviously true, which is you, regular people, need access to assets like buildings, like hospitals, like schools, like food, like homes, like water, like energy, you need to have some way of getting access to those assets. And you basically have a choice to make, right? Which is either you tax rich people or you borrow from rich people. And I sometimes get very frustrated because I've been trying to convince like the UK political left for more than 10 years now, since way before I started this channel, that they need to be more serious about building their capacity to tax the very rich. And in many cases, there's not been much appetite for that. And now we have people on the left who have not really supported our campaign to build structural capacity to tax the rich and have built their whole economic long-term plan on borrowing from the rich, turning around and saying, well, who gives a about the bond markets? If your entire economic strategy is to borrow money from rich people, then you will be a slave to the bond markets. And if you do not want to be a slave to the bond markets, the only way you can do that is to sort out your capacity to tax very rich people. These guys own all of the assets. If you are unable to tax them, then you will be unable to access the physical assets and wealth that you need to sustain a good economy without borrowing from them, and you will continually be a slave to the bond markets. All right, and now this is the third one, which I have been asked a couple of times in recent interviews because I'm on the press campaign for my upcoming documentary, keep an eye out, which is that wealth taxes will be punished by the bond markets. And this, it reminds me of the Economist video we did a few weeks ago, where the economists were like, we hate wealth taxes, we love inheritance taxes, without realizing that from the perspective of the very rich, they're like structurally, functionally like the same tax. Which is, it just reveals just like a fundamental like economic incompetence. And I think it reveals this way that people kind of like anthropomorphize the bond markets as if the bond markets are like the disembodied spirit of Margaret Thatcher that just hate anything that seems vaguely left wing. What the bond markets want is their money back. Okay. The bond markets want high taxes and low government spending. That doesn't mean that's what you should do, but that's what the bond markets want. Right? And if you increase your capability to tax very rich people, that increases your ability to keep inflation low and fucking pay your fucking creditors back. If you don't bring in your ability to tax rich people, it will become like the very, very rich. As they get richer and richer and richer, and the rest of society gets poorer and poorer and poorer, it will become increasingly very, 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 very difficult for governments to support the poor, support public services, support the welfare state, and pay their creditors back. And I think it's like painfully obvious, like the best thing that you could do in order to reassure your creditors is build the capacity to tax very rich people. And anyone who doesn't see that well-designed wealth taxes are obviously what the bond market wants is basically a little bit dumb. But I think when we talk about this idea of like, oh, if we try to tax the rich, it'll be bad for the bond markets. I think in order to understand this conceptually, I think it's important to recognize that high levels of debt, government debt, literally are wealth inequality. I'm going to unpack that a little bit because I think it's an important like conceptual idea that you need to understand, right? Like, wealth inequality is not an abstract thing. All right. There exists a certain amount of physical wealth in this world. Land, houses, building, natural resources, skyscrapers, all of these things. And all of those resources are owned by somebody. And the wealth distribution is who owns those resources. And on top of the distribution of the literal ownership of real physical resources, we also have debt, which is a zero-sum game, which is some people are in credit and other people are in debt, right? Low wealth inequality means the resources are owned in large part by ordinary people and governments. Okay, yeah, there are some people who own a bigger share, but broadly everybody owns a bit. And low wealth inequality means that you don't have one group of society heavily indebted to a tiny minority. High wealth inequality means the vast majority of the assets in this country, in the world, are owned by a tiny minority of people, and also the majority of people are indebted by a large amount to the very rich. This is literally what wealth inequality is. And I want you to understand that wealth inequality is not just about wealth, it is about power. Because who owns the resources is who is allowed to consume and who is allowed to decide how the physical resources of the physical world are used. And if you have governments that own a big chunk of wealth and are not massively indebted to the rich, then governments have a lot of freedom to do what they want. And that is why in that post-war period, from the end of the Second World War up until the 80s, when Western governments owned large amounts of wealth. And I want to make it clear, this is about owning productive assets, schools and hospitals and land and houses, right? When they own those assets, the ownership of those assets, combined with the lack of being massively indebted to the rich, gave them the power to provide ordinary people like your parents, like your grandparents, with things like education and healthcare and housing and affordable food. They own the assets produce the things that you need, so they could provide you with the things that you need because they own them. Now, your government does not own those assets. Those assets are owned by the rich. And on top of that, your government is in debt to the rich, which means that your government needs to pay a significant amount of interest to the rich every year. And what that means is your government, and essentially you as a taxpayer, have become, in a very real way, debt slaves to the rich. You don't own assets anymore. They own the assets. You need the assets to fucking live, and you need to pay them X amount of money every year on top of the money you need to get access to those assets. Because not only do you not own the assets, you are in debt to them. So there's no point complaining about the fact that the bond market runs your government if you are not willing to actively fight against wealth inequality, because they're the same fucking thing. If you don't want your government to be totally dominated by a bunch of traders in the city, then don't give all of your fucking assets to fucking 20 fucking guys. I did my video last week on Elon Musk, right? What I'm trying to do, the whole thing I'm trying to do on this channel is to make you realize wealth inequality is not some abstract thing. It's about who owns your fucking country. It's about who owns your planet, who owns your houses, who owns your food, who owns your ability to produce all of the things that you need, right? So there's no point. What really frustrates me is I continually see people upset about the consequences of extreme inequality, which is we don't get any access to the things that we need: housing, education, healthcare, food, leisure time, anything, opportunities. But unwilling to fight the obvious cause, which is, again, I'll show this graph, you've given them all of your fucking assets. If they've got the assets and you are in debt to them, then you are their slave. And that's how it's going to be. That's how it's going to be. I worry because obviously, here in the UK, we're going to get a new prime minister. And I hope that I've been clear that I support that decision because, we were never going to get what we needed under Keir Starmer, and I hope they will under Burnham. But I worry that this new government, and there's no wood to touch. I hope that they don't. But I worry they're going to come in and repeat the same mistake that Starmer made, which was the same mistake that Biden made, which is the same mistake that basically same mistake that Macron made, the same mistake that Merz made, which is just fundamental naivety about the importance of who owns your wealth. If you do not do anything about the situation, which is not just existing, but progressively worsening every year, which is your government, your middle class, your working class has less and less wealth every day and more debt to the super rich every day. If you do not do anything about that, then you will inevitably be, and I'm really pleased that we're getting watched all over the world because I want other countries that are not in such an extreme situation as the UK to recognize this is what will happen to you. And it's happening in Italy, it's happening in France, it's gonna happen in the US. All of us will live in countries where we can vote red, blue, whoever we fucking want, and the people in charge are 300 fucking traders in the city. That is what happens if you don't have wealth and if you are in debt. It doesn't matter who is in power because they have no power. They have no wealth, they have no power. And the only way you take that power back for regular people, for democratically elected governments, is to fix your distribution of wealth. And the only way you will ever achieve that is serious taxation of the extremely rich. But it's not just governments. Same thing is happening in housing. If your government has no wealth, it cannot provide you with a good welfare state. But if you, as ordinary families, have no wealth, then you are not going to be able to outcompete the rich for housing, and you won't get housing. And you're not going to be able to outcompete the rich for food, and you won't get food. This is. I'm really hoping that the point I'm getting through to you here is wealth inequality is not an abstract concept. It is about who is allowed to live in a home, who is allowed to have education, who is allowed to have healthcare, who is allowed to have holidays, who is allowed to have leisure time, who is allowed to have retirements. That is what wealth inequality is. There are not infinite amounts of all of these things. And if we allow ourselves to exist in mathematical systems where every single day these guys are losing share and these guys are gaining share, then your share will get less and less. And that is why you can't afford a house. And that is why in many cases, ordinary families can't afford food and heating. Right? That is why you can't afford a pension like your dad had. That is why you'll never be able to retire. We do not live. I get people always say, oh, zero sum. We do not live in infinite sum games, right? And if we have trillionaires increasing their wealth at 40% a year, this is what you get. No food, no housing, and governments which can't do anything. And this is why the UK situation is actually, the UK has the highest borrowing costs of any major Western nation. And that is bad, very clearly. And that is why the UK government so much has its hands tied and is so limited in what it can do. And I think whatever you say about Keir Starmer, I think he probably did want to do more than he could do, but he was very quickly disciplined by financial markets. And basically, he was essentially deposed a year and a half ago and just sort of had to sit on his own grave for a year and a half on his way out. The UK government is probably the first government in the Western world that has reached this point where it is no longer able to provide the things that its citizens need by running, I'll again show this graph down. What this graph of government wealth going down shows you is that for a long period of time now, Western governments have been providing you, Western people, most of my viewers are in the West, with a decent quality of life by basically selling the family silver. Western governments were able to accumulate a big chunk of wealth during World War II, just after World War II, and they have been providing you with a good standard of living by selling that stuff back to the rich and by going in debt to the rich. That is obviously never sustainable. You can only sell your assets once. The rich will only allow you to get into so much debt before they stop lending. And the UK government has been the first one to hit that wall where they can no longer do this, to be honest, in my opinion, frankly stupid thing that Western governments have been doing for 40 years of saying, let's just give all our debt to the rich and people who we have no capacity to tax. You've hit that wall and you can no longer borrow. You can no longer sell off your assets. And now you have to choose. And I think we are at such an interesting time here in the UK because we're about to get a new prime minister. And I worry, if I'm honest, that he will be advised that he can get through this with some sort of financial economic jiggery-pokery, whilst that wealth transfer is ongoing, and that will not work. The UK government now is faced with the three clear options, which increasingly will be the only three options available to any Western government, which is either significantly increased taxation on the very, very, very rich centimillionaires, billionaires, significantly increased taxes on working people, higher earning working people, or continue the gradual shutting down of the welfare state, which has been happening for the last 15 years in this country. Those are your only three options. And I want you, the viewer, and I want Andy Burnham, who will be the new UK Prime Minister soon, to be aware of that. There are no other options. Those are your three options. And I absolutely guarantee you that we in the UK, and you wherever you are watching, will see in the course of the next 10 years, your government do a significant amount of at least one, probably a combination of two of these three things, which is significantly increased taxation of the very rich, significantly increased taxation of working people, or the dismantling of the welfare state that your fucking grandparents fucking died for. Right, these are your three options. And I want you to know that because, I'm aware, and I've been saying this quite a bit recently, that there are some like moderately rich people who might be worth 1 or 2 million, or people with good jobs who don't like my ideas, don't like this channel, so they want me out of the picture. So let's say you get me out of the picture, bam, you can't tax the super rich anymore. You are then faced with only two options, which are significantly raised taxation on working people, including high earners, or the dismantling of the welfare state. And maybe you're thinking, well, that's fine, because what I'll fight for is the dismantling of the welfare state. So once we dismantle the welfare state, and we enormously increase poverty in your country, we close down all the schools, we close down all the hospitals, millions of people lose their jobs, and all of that wealth is accumulated by the very rich. What do you think happens next? What do you think happens next? If we don't deal with the taxation of the super rich now, there's only one other option, which is a fight to the death between the poor and the middle. And whichever one of those you're on, if you think you're going to win, what happens when that other side is gone? This aggressive growth of the wealth of billionaires, there is a mathematical inevitability to this. And there is a historical inevitability as well. Read your history and understand that the past 2,000 years of human history is in 10 guys living like kings while everybody else starves on the streets. That is all of human history, except for the last 70 years. And we only managed to provide these things which we're losing now. A welfare state, education, healthcare, the kind of education and healthcare that I've had, that my dad had. My grandparents and great-grandparents could never even dream of that. The kind of secure housing, the kind of secure food. But it's important to recognize that they did that by taxation of the very rich. So look, that's it. That's the end of this week's video. Again, I think I've made a little bit of a turn back to these more depressing videos. But the reason I've done that is because we are going to have a new government here in the UK. And if I'm totally honest, and I've come out and I've told people to vote for Andy Burnham, and I've told people to vote for Labour in the recent by-election, which has got him into this position where he can become, and he will become, Prime Minister. But if I'm totally honest, I'm worried. I'm worried. I was in Parliament all day yesterday trying to talk to politicians. But we are not professional lobbyists. We've got one member of staff here at Gary's Economics. And I'm not a professional lobbyist. And I'm out there trying my best to convince Andy Burnham and his team of the importance of this. But obviously, every billionaire in the country is spending a lot of money to convince him that all he needs to do is some sort of technocratic, technical, economic jiggery-pokery, and everything will be fine. And if that happens, I know what will happen, which is it will be Keir Starmer 2.0, and he will become very, very unpopular very quickly. And it will be Nigel Farage. And whatever you think of Nigel Farage, he's not going to raise taxation on the rich. But if I'm totally honest, my concern is not really Nigel Farage. My concern is what happens after Nigel Farage. Because if Burnham fails on living standards, and if Burnham fails on inequality, and if Burnham fails on the economy, I guarantee you that Farage will fail on living standards, and Farage will fail on inequality, and Farage will fail on the economy. I like history. I read a lot about history. And I think it's important to recognise that what is happening now is not very dissimilar from what happened 100 years ago, where inequality grew and grew and grew and grew and grew. And the billionaires funded the right wing of politics to say, don't worry about us, kick the foreigners instead. And every time a right wing party failed on the economy, they went further and further and further and further right. And I don't want that to happen. I don't want it to happen in my country. I don't want it to happen in your country. But I've got a big opportunity here. And we've got an opportunity to change things. And like I said, I'm not a professional lobbyist, but I promise you, I'm working my fucking tits off to try to communicate to this new government that they need to do this. I'm offering to help them in any way I can if they can show me some seriousness on it. I'm working incredibly hard. I've got my documentary coming out in a couple of weeks, which I'll do an announcement about soon. We've managed to get Gabriel Zucman on The Rest Is Politics. And I'm hoping to do a bit of press and to create a bit of a moment about this so that we can put a bit of pressure on Andy Burnham and his new team to talk to me, to talk to Zuckman, and to bring us in and do something on this. You know, if I'm honest, I'm incredibly proud that we're at this point where we could maybe feasibly have a bit of influence on government policy. But the truth is we're not there yet. And we don't know if they're going to give us the things that we need. So if there's any way you think you can support the message, spread it in this little critical moment, you know, we might only have a couple of months to try and get this in, then do it, you know, support however you can, whatever that means, telling your friends, your family, sending this video to your mum, writing to your MP, calling into LBC, you know, putting up posters, putting up stickers. All of the MPs are saying tax wealth not work, tax wealth not work. Just say that, you know, I didn't invent this slogan, but it's amazing, the power of this slogan. Say it, you know, stick it on the wall, you know, paint it on the side of your f***ing house. We might not get a second... We might not get a second chance on this, so you do your best and I will too. All right, that's it. Tax wealth not work. Good luck.